Hi there everyone and welcome into this week's market update. Don't forget that any advice contained within this presentation is general only, so it isn't tailored to your particular circumstances. You need to decide for yourself if it's appropriate to you. Okay, what a couple of days it's been. So, we had a pretty big pullback over the start of this week. And that's brought us back down to the bottom of the range here. We tried to break out the bottom of that channel this morning, but buying very quickly came back in and pushed us back above the overall uptrend. So at this point of time, we've still held the longer term uptrend, guys. We're fulfilling a very much long-term sideways movement once again. Very typical to our market. We take a run sideways into trend, take a run sideways into trend, take a run sideways into trend. So every time we get to this sort of point, and we call this pattern a pennant pattern here, every time we get to the point of a pennant pattern like this, we're waiting eagerly and watching to see which way we'll break. Look, my gut feeling the break will be up, but we only trade what we see. So waiting for that little bit of confirmation here, and hopefully we'll get that over the next few days. So I guess, the question on a lot of people's lips, once again, same questions we're asking back here, is this the start of a big one? Is this the start of a correction or a big pullback like what we saw last year? At this point of time, I'm very, very doubtful of that. Okay, so look, there's always the risk of a 10% correction around the corner. We haven't seen one of those for a while, but I still don't think there's enough bad news on the table to see that happen just yet. Now, coming across the S&P 500, sort of similar deal there. A couple of really rough days that's brought them back to the uptrend line. They haven't formed a lower peak, lower trough, so there's no downtrend here just yet. These are things you're always looking out for. We are testing the long-term uptrend line. You can see that through here. So once again, you're going to be asking yourself the question, is this the start of a 10% pullback? 10% pullback, we're talking about a move back to the 200-day moving average, 3,900. Okay, once again, doubtful. Very, very doubtful that's going to happen unless some more fuel gets put on the fire tonight. Only time will tell. If we hold the trend line though, and bounce off here, break a pennant pattern as similar to what I'm looking at in the Australian market, then things are looking very bullish once again, and we could push easily into all-time highs. So technically, look, we're there. We're right at a pivot point. Let's just confirm the trend again. Once we get some confirmation, then we'll be looking to load back up on some bullish trades once more. Okay, so why are we selling off? Well, there's a couple of reasons that have triggered this particular sell-off. One reason was over 80,000, or just under 80,000 cases of COVID in the US on Friday. I think that sort of kicked things off a little bit. Since, though, there hasn't been anywhere near that amount of daily cases, so let's just keep an eye on that front. But that was one of the reasons. Across the world, also, we're seeing this Delta variant of the virus spread rather quickly, and we're starting to see an uptick of daily cases. So despite the vaccine rollout, we're starting to see that influx of cases around the world again all at once, and that's got quite a few people scared. So that's probably one of the reasons. The other reasons, we saw the Fed talk last week. So Jay Powell, also Janet Yellen talking around inflation. Jay Powell is still pretty dovish in my opinion. Only thing he did was take his words transitory out in talking about inflation. And Janet Yellen really sort of came across a little bit on the scary side on inflation, saying that there's a couple of big months of inflation to come. And I guess, depending on what context you take that in, it could be negative. I'll put it in another context for you if you haven't read this already. Most of the inflation we're seeing is just really coming from supply chain issues, coming from shortages created from COVID lockdowns. Once that clears through, you'll find that this inflation will come back down and correct itself back in its 2% to 3% range where everyone wants it. In saying that also, when you're looking at year-on-year inflation, if you go back 12 months ago, inflation was extremely low. So we're coming off an extremely low base, and that low base is going to exist for another 2 months, right? So yes, we're going to see a couple of high readings of inflation over the next 2 months. But is it here to stay? I doubt it very much. Okay, crude oil coming back down also. That will give you downward pressure on inflation. I think this will all clean itself up in the next sort of 3 to 4 months and will normalise. Then we'll be asking the question of, are we going to have deflation again? Okay, are we going to have lower than that 2% inflation target coming into 2022? I think that might be the bigger problem at the end of this year. I don't know, just crystal balling, but things we'll worry about later on. So look, there's probably a couple of main triggers really. It's just COVID worries, inflation worries. If inflation is really high for an extended period of time, it will force the hand of the Fed to start tapering bond buying and increasing interest rates. That's what people are speculating on. I'm sitting here. I believe that we won't see any raise in interest rates anytime soon. I think we're quite a few years off that, and the Fed, I don't think they'll taper bond buying this year, to be honest, right? So look, let's just see what happens. I could be right, could be wrong, but nonetheless, in the short term, there's plenty of stimulus around to hold these markets up. So any pullback we see, how low it goes, even if it's a 10% correction, it will be temporary. We'll be back on the uptrend in the next few months, next few weeks, next few days, right? So I'm still pretty bullish. Central banks, I've talked about them a little bit. We've got a couple of signs of some central banks starting to taper bond buying, but the amount of bond buying happening out there is still huge. It's very accommodative, very low interest rates. Doesn't get much better for equities in the long run, and I don't believe it's going to drastically change anytime soon. Maybe early next year we might start seeing a bit more tapering. RBA's already mentioned that they're going to taper through the end of this year, but it's only a very small amount, guys. Very, very small amount. All right, and I think it's their way of testing the market to see what they can handle. Lockdowns. Okay, we've got half the population in Australia in lockdowns right now. That is weighing on sentiment. That will hold us back a little bit here, guys. Okay, so we've got on one side some positives, on the other side some negatives. The negative side of this is this lockdown. Victoria has pushed the lockdown out another week. New South Wales, who knows? I think there'll be lockdowns right through to the end of August, in my opinion. Although they might start loosening some measures through the second half of August, depending on how their numbers are going. The hard lockdowns we know are effective, guys. It's just time. How long it's going to take? The reason why we're not seeing a huge market sell down like we did February last year is that we've got a cushioning to the market now. As lockdowns get worse, we know that governments are going to step in with a cushioning effect. So any pullback we see will have a very soft landing and a rebound. So Fed government's now allowing people to get like a seekers, keepers type allowance straight from Centrelink. If you lose more than 20 hours of work, there's one payment. If you lose more than that, there's another payment, something like that. But you can go get payments from the government. There's going to be business payments, aid coming out as well, I think from a state level. And so look, it's just all a cushioning effect, isn't it, right? Banks are offering up loan freezes again. So you can freeze your loan for a few months if you need to through the lockdowns, that sort of thing. So look, it's all a cushioning effect. It's going to stop this GFC style pullback, guys. I've had a lot of people asking me about whether this is the start of a big one again. No, right? At worst, this will be a 10% correction, and at best, will be up in the green and back to 7,400 by the end of the week, right? That's where my head's at on the current pullback. I think we'll be back in the green in the next 2 or 3 days, guys. Honestly, by the end of the week, this will be just a small pullback, and we'll be back on track to breaking higher. US reporting is one of the other major reasons why I'm bullish here, guys. We've got they are smashing expectations. Okay, absolutely smashing it. This is a ripper of a reporting season so far in the US, but we've seen a big pullback in the banks. So the time has just been a bit interesting in the pullback. I guess a lot of people are questioning what's to come in the next 6 to 12 months. People are questioning whether this is the top. There's just no buying in this market right now, and that's a fair point. You've got a lot of money flowing towards bonds right now. You've seen the longer term yields after the Fed announcements fall dramatically from about, US 10-year was sitting around 170 not long ago. That's now sitting at 120. So the money flow's been towards not equities but bonds for the last week or so, as people have gone towards more of a safety asset. I think the market always needs a pullback before it can really gain much more. That's that typical trend movement. People don't like buying up high unless there's a pullback. You want to feel you're buying short-term bargain, right? So pullbacks are always an important part of a trend, and without them, you start going sideways for months and months on end. So this pullback, I think, is going to be healthy, you guys. I think this will push towards seeing the banks break higher. Crude's also holding the banks back, so this whole OPEC timing was horrible for the reporting season. So that's also been a horrible timing event for the markets in the short term. But longer term, things will come back to fundamentals, and those banks reported extremely well in the US, and some of those banks are sitting at a 10 or below PE, which is on the cheaper side. So I wouldn't say the banks are expensive here in the US. A small pullback should see some buying come back in, and I'll be watching that for an opportunity as well. As well as in our market, the banks are pulling back at the moment. Aussie reporting is starting to warm up a little bit, so you've got CIMIC this week. You've got Rio next week, and then coming into early August, you'll see a lot of financial reporting. Through the rest of this month, though, just watch out. There's a lot of quarterly operational and production reviews that you'll see out of the miners, the energy, and some other sectors there. So just keep an eye on your calendars. Rio's production report missed a little bit last week. That's why you saw the miners pull back for a few days there. But the fact that they missed on iron ore production slightly adds to the reasons why iron ore prices are so high. With Vale, with a lot of their production offline, Rio was a little bit weak. Let's see how BHP and Fortescue fare on their production results next week. There might be some great opportunities in these miners coming into the reporting, guys. There is no way at these price levels that any three of those miners are pricing in iron ore above $200. Okay, the reports are going to smash expectations, and they're going to also once again likely pay very big dividends. Okay. All right, so lots to come, guys. A lot of things happening with reporting through this period. As long as we continue to see strong reporting, I'll hold my view that our market's going to continue to push up much higher over the next 6 months. Okay, but we always have to have these sideways moves. We always have to have these pullbacks in the trends. They're all healthy and normal. Let's just see where the bottom of this move is and get ready to go long again. That's my opinion. All right, so happy trading, guys. Thanks for listening in, and bye for now.